In today's video, we're going to discuss if we should switch from Yieldmax to Curv funds because many people are saying that Curv funds still has nice dividends but less erosion. Yieldmax helps me earn over $600,000 per year in dividends, as you can see below, and we're outperforming all of the indexes with Yieldmax and margin. We're up 40% for the year. The Dow in comparison is up 14, the Nasdaq's up 31, the S&P is up 25. So we're beating all of the indexes on a year-to-date basis with Yieldmax and some margin. We also outperformed today. We're down 17,000 on this down market day, but that's only 1.06%. If you look above, you can see that that beats the Nasdaq and the S&P. So we're beating all of the indexes with Yieldmax and margin, and we're living financially free out of our brokerage account as a result. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. Our margin debt is now $632,000, but I'm not worried about that margin debt because my dividends of over $600,000 per year pay back my margin debt in around 1 year. All of my members know here at this channel that I like to use a little bit of Yieldmax to get my outperformance and my income. So when it comes to choosing between Yieldmax and Curv funds, I think the first thing you need to see is that Yieldmax has higher dividends and also they have pretty good performance, right? Ever since Yieldmax changed their structure to get better performance with their ETFs, I've been enjoying those changes, okay? Yieldmax, as you can see here by the Apley chart, Yieldmax still has nice performance. Here's the Apley chart here, okay? It moved upper left to right, and if you look at an Apple chart, it looks similar, of course. But if you go to the Curv funds for AppE, you'll see that it looks similar, all right? Just like Apley for Yieldmax, but the yield is much higher for Yieldmax, okay? Apley's yield is 29% and Curv's yield is 12%. So we're getting the same upside with Yieldmax, it looks like, the same performance on the charts, but we're getting much bigger dividends with Apley instead of AppE. All right, so that's one reason why I like Yieldmax, is because as you can see here, we're getting the performance and we're getting higher yields in the process. All right, how about Netflix? Okay, Yieldmax uses NFLY to cover Netflix. That's a 61% yield. But over at Curv, you can see that Netflix NFLP has a 35% yield. So Curv's Netflix has half the yield that Yieldmax's version has. And as you can see here on its chart with Yieldmax, Netflix moves upper left to right as well. So moves upper left to right. Look at NFLP, also moves upper left to right, but we're getting twice the income with Yieldmax, all right? So I think that this is a very compelling reason to stay in Yieldmax, first of all. I mean, we're getting the same performance on their charts, but much bigger dividends with Yieldmax. But I have three other points that I want you to consider when it comes to switching from Yieldmax to Curv funds, as if this information that I just showed you isn't enough. All right, so at this channel, you know that we're trying to live the FIRE lifestyle, which means financially independent, retire early. And so in order to do this, you need qualifying income. All right, the more dividends that we have, the more qualifying income that we get. That's how we get loans to level up our accounts outside of our brokerage accounts. And that's also how I get loans just to live in a house or buy a car or do anything in my life, because you need either pay stubs or dividends to qualify for loans, okay? So bankers won't take capital gains. They're too unpredictable. You need dividends to act as your pay stub. Yieldmax gives us more income. That gives us more qualifying income so that I can buy whatever I want in my life. Your world opens up when you use Yieldmax and these dividends, because you need 2 years of average qualifying income to get a house, for example. So if you have more qualifying income coming from your dividends, well, then you can qualify for a bigger house. Then you can use a HELOC on that house, tap that for more equity, reinvest that in the market for a higher return, and then supercharge your account. Okay, the other reason why I like Yieldmax dividends over Curv is that Yieldmax dividends pay more in a downturn, so you're protected more in a downturn. If Curv is going for more upside appreciation, which I didn't even see by those charts that I showed you, well then in a down market, we're going to get less income from Curv and less performance on their charts, so we're not going to be able to pay our bills and lower our margin quick enough, all right? So I like the fact that Yieldmax has more income because it's actually helping me in a downturn to live free from 9 to 5 and pay my bills in the process, all right? And that obviously leads me to my next point, where my margin also gets paid down faster when we're using Yieldmax. So when my margin gets paid down faster, I can level up my account faster, because once it gets paid down, I can take out more debt to then get more income and more performance, okay? So the key is paying down your margin quickly with Yieldmax. Curv funds won't pay your margin down fast enough, so that's really going to hinder your growth plans, in my opinion, especially in a bear market. The margin debt that I use helps me win in any market, okay? Even if we're down on a down day, once again, I've showed you in past videos that that we actually perform in line with the indexes, especially when we get our dividends at the end of the week. But also, when I use Yieldmax to get my margin down, it pays down my margin faster and lowers my risk faster because we lower our cost basis faster. And again, we get to accelerate our growth plans with Yieldmax. And these plans work regardless of an up or down market because the dividends just pay back the margin debt and we get our growth from that, okay? The margin debt goes away by the end of the year and then your account grows by that equivalent amount. And since you're using two accounts essentially to grow your account with your account and the margin that you use, you're actually going to continue to outperform the market even if the market is down or sideways because these dividends just keep rolling in, paying down your margin, increasing your performance in the process. As I always say, in 2022, we outperformed that bear market because all of our dividends kept paying down our margin, which increased our performance, and we used Cornerstone to dollar cost average at the bottom, okay? Cornerstone is obviously the largest holding in my account because it is the index. It's a 4-star fund, as you can see above. And as you can see here on the chart, it moves upward, left, or right on its 10-year chart. But on a chart with E-Trade, you can see that it moves sideways to down. If you go to a 10-year chart here on E-Trade, you can see that it moves sideways to down, unlike with Morningstar. So on a 1-year chart, we were killing it. We were beating all of the indexes before the recent market correction with Cornerstone. It pays a 20% dividend, and it drips that dividend down at the NAV, okay? But on a 10-year chart, it goes sideways to down. That's because you have to factor back in dividends and drips and rights offerings. Please play Cornerstone properly around its rights offerings if you want to capture this special drip, okay? You get 27% gains every month with Cornerstone, okay? You get the 20% dividend and 27% gains, again, on top of those dividends every month with Cornerstone, but play it properly around its rights offerings, okay? Many closed-end funds like Cornerstone have rights offerings, and we alert you of the Cornerstone rights offering announcement here in Discord, okay? So if you need help playing Cornerstone, that's in my Volume 4 e-guide. And if you want to be alerted of the rights offering announcement in Cornerstone, we have that feature here in our Discord chat room, okay? We have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle. So if you ever have questions about your brokerage account that I can't answer, someone in there most likely can answer for you. But again, the most important feature of that Discord chat room is our Cornerstone rights offering announcement alert system. So that's how we're outperforming, okay? I put so much money in Cornerstone and the indexes. I don't put as much money in Yieldmax because they're stock-based, and I definitely don't put as much money in Curv because, once again, for all the reasons that I listed in this video so far, it makes more sense for me to be in Yieldmax over Curv. Also, we use put options in our account at all times, okay? So I'm always hedged. Our put options were up big last week, and if we ever have a 20% correction, well, I'm covered with my put options. If you need help hedging your portfolio like I do with put options, that's in my Volume 5 e-guide. So again, we outperformed in 2022 thanks to margin because our dividends just pay back our margin, and then we increase our performance that way. But also, we outperform thanks to Cornerstone because it drips that dividend down at the NAV, so it buys at the bottom for you. It dollar cost averages at the lows for the market for you. So when the market ends up going higher, you make massive gains with Cornerstone, okay? It averages 20% premiums, you get the 20% dividend, and you get those 27% drip gains at the NAV, which again, dollar cost average for you at the bottom and help you outperform the indexes. Okay, another issue that I have with Curv funds is that they have high maintenance for their lower yields, okay? The maintenance for NFLP, for example, is 50% maintenance. So if we're talking about maintenance versus the dividend yields, well then the cost of my equity is much more with NFLP, all right? I don't like how NFLP has 50% maintenance, again, and lower dividends. Maintenance is the whole key to what I do here at this channel because for every $1 you put in your account, you get $4 of purchasing power, all right? I'm just using a fraction of this purchasing power to get ahead. As all of my members know, my dividends pay back my margin at the end of the year, but also we keep our available withdrawal high enough to withstand over 20% corrections at all times. And again, if we have over a 20% crash overnight, well then my put options would make us more money than we lost in the event of that crash. But should we have a prolonged downturn, well my dividends are going to pay back my margin, as you know, all right? And then we keep our available withdrawal high because we have low maintenance names that allows us to withstand over 20% corrections and pay our bills and live freely out of our account at all times. But you have to watch your maintenance. And once again, if you need help with maintenance, that's in my Volume 3 e-guide. All right, last but not least, you can also sell options on Yieldmax. I'm not even sure if you can sell options on Curv, but I like to sell options with Yieldmax and Defiance because they lower my cost basis by a ton and they lower my margin by a ton, okay? So if you can sell options, that lowers your volatility, that lowers your margin, And that gives you more performance because if you get a sign on these options, then you go long at the lows, or you can just sell options, sell time, sell volatility, do nothing, let it expire, okay? And then your account's gonna grow by the equivalent amount of these premiums, right? My BidX put here, we got 50,000 just for selling a put on BidX, for example. One click of a mouse, we get $50,000. It lowered our risk by a ton, okay? It lowered our cost basis to 20. It lowered our margin by 50 grand. If we get a sign at the lows, then we go long Bitcoin at the lows. If we keep going higher, well, then we just collect this 50,000 as it expires, okay? And then our account grows by 50,000. I think it's the much safer way to play Bitcoin, Yieldmax, and Defiance funds. If you need help selling options like I do to get more performance out of your account safely, because selling options is the safest way to go long on a stock, that's in my Volume 6 e-guide. All right, so for all the reasons that I've listed in this video, I think it makes sense to own Yieldmax over Curv. We have the same charts with Yieldmax roughly, especially after they made those adjustments with their trading strategies in Yieldmax. That's really been a welcome change with Yieldmax. So the charts look very similar with Yieldmax and Curv, but for the reasons I've listed in this video, okay, we have more income with Yieldmax, and that gives us many more benefits to living the FIRE lifestyle. All right, so we're up 40% for the year, outperforming all of the indexes with Yieldmax, Cornerstone, Margin, and some other dividend-paying funds. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. All right, so if you like the video, please click like or subscribe. Also, if you think that I missed something about Curv when it comes to switching from Yieldmax to Curv, please leave your comments below, and I'll talk to you soon, everyone. Thanks.